Alright, hello everyone, and welcome to the daily update on my 1000 days challenge. This is day 10, so let's get things started. Alright, so across the board, we did actually see a very, I would say, lean towards a neutral to bearish sentiment. So especially if you look in terms of US equity itself, I did mention that yesterday, even though it started out well, we wanted it to show a sign of a strength, but instead actually show a sign of weakness on the S&P 500. But even though we did close above the criteria one, which is what I mentioned, which is to close above 20 exponential moving average on the daily chart, so that was done. But bear in mind that firstly, it's a weak candlestick. Secondly, today we actually opened below it, which is not what we want. We're going to see a very strong bullish break towards the upside and a much bigger room for growth prior to seeing a drop, which means to say we wanted to see continuously pushing towards the upside to at least this 50 simple moving average, which coincide to this previous support region as well, before we see some sort of weak pullback and then a push towards the upside. That will be a much more clearer kind of a bullish reversal that we would like to see. And in addition to that, there's also no confluence when we see the Nasdaq as well, because yesterday we actually closed below the 20 exponential moving average on the daily chart, showing a clear sign of resistance. And if I were trading it in terms of a daily time frame for Nasdaq itself, I'll definitely be looking to enter a short, similarly to what you potentially be seeing over here as well. But of course, right now things is getting a bit choppy, especially when we shoot straight up. I think that shorting over here with a stop loss right below will be actually a very good setup with another target over here to take profit, giving you a very decent risk to setup itself. All right, and then moving in terms of the ASC chart itself, what we do see over here is similarly same thing. We're seeing very clear rejection of the 20 exponential moving average once or twice, a third time, and this is the fourth time itself. So definitely this rejection near this region itself makes it a very good short opportunity itself. But like what I mentioned, I don't short for especially indexes simply because they have a tendency to get up and down. The only potential possibility that if you do intend to short indexes is I would really recommend trying out options, and that will a much better play simply because it does restrict in terms of the losses when played correctly in that sense. All right, same thing for KWEB, definitely still leaning bearish side, but of course we are still a little bit extended over 20 exponential moving average, so definitely some sort of bounce could happen. But otherwise, I do think that this $20.80 is likely to be even breached. In this case, how low can we get? I think you draw another lower than that. I did. Yes, I did. So I would say that the target wise, definitely I would say the mid to long term wise, we could potentially be hitting even a 10 itself. That will mean a 90% drop from the all-time high, which is definitely extremely devastating when it comes to the overall indexes of the stock market itself. And even though by the percentage wise it looks devastating, but I still think it's actually potentially possible, especially with how the current economic situation is with China and how people may be bearish in the sentiment, especially with the East and the West, in terms of how the politics may run and how the economics and how the capital market may work, not in the favor of the Chinese market as well. So yeah, so definitely some sort of a bearish sentiment could be in play, but bear in mind that a lot of all these things may already potentially have been factored in which case you could see a much clearer support somewhere along here. If you do want to see a potential kind of a support level, I would say is definitely arbitrary. What you could do is do over here, and then potentially there could be support at 16, 15, or even near the $12 mark region. All right, and then finally for Bitcoin itself, we do see potential rejection of the 50 and 20 exponential moving average over here. So clearly itself, like what I mentioned, even though moving averages are remaining relatively flat, what it does show is that we are clearly in the consolidation stage. And then a breakout in the direction will make a much more kind of a impulsive move. But definitely a breakout needs to be coupled with volume itself. So we want something like this, but we don't want some sort of like a rejection like this, and then there's no continuation. So generally, if this happens itself, the best I would go for is put a short right below that, in which case it didn't trigger, and then we'll actually wait. And then once we see this bullish engulfing again, we'll actually cancel the trade, and then we'll wait for a nearer kind of a clearer break in that sense. So similarly, when we want to break over here, we do want a strong break. This could actually be a potential break itself where we get entered. But of course, we see a clear rejection over here, in which case you could choose to take a stop loss with a very small percentage loss. All right, so other than that, I don't see any nice setup in terms of daily and 4-hour chart. Definitely choppy and nothing of interest to me. Of course, on the intraday, be in the 15 minutes or even shorter time frame, I did actually enter a short yesterday itself and did take a small profit on that. But that is not considered in this equity balance simply because, like what I mentioned, it wouldn't make sense for me to give you in terms of a background setup that doesn't make sense for you to take out on the 4-hour and daily time frame above, simply because that will not make sense for a daily kind of update of the situation. Yep. All right. With that said, I've come to the end of today. If you guys have any questions, feel free to drop by comments below, and I'll see you guys tomorrow. Take care. Bye bye.